A red day for Bitcoin as the dollar index continues to do what we hoped it would not. We're getting a serious bounce from the dollar index at its 200 exponential moving average, which could spell some bother for Bitcoin. In this video, we're going to break down the key levels. We're also going to look at some on-chain metrics to see what is going on, because there are some scary things going on-chain activity, which shows that Bitcoins are flowing off exchanges, but also that old coins are starting to be spent. Yes, those people who are hodling for more than 3 and 6 months are starting to capitulate and panic. What does this mean? Is confidence now dissipating post the FTX collapse? Are people seriously getting worried? And could this spell a deeper downtrend for Bitcoin? We're going to dive into this, guys. Don't forget to subscribe. Check out the links in the description if you want to buy any cryptocurrencies. Those are the exchanges I personally use, Bybit and BITGET, for my trading. But of course, please do your own research when picking your exchanges and make sure you are diversified. Right, so we've got half a day here in the US equity market, so it's important to know you've got low volatility today. Fear and greed index is sitting at 20, same as yesterday. So this is a noticeable shift. Last week we were around about that 23 level. Just a month ago we were sitting at 33, and now we are back at that 20 level. So this has been a meaningful shift, and the markets are starting to understand that this FTX issue wasn't just going to appear and then disappear in a couple of days, but the contagion and the effects are to be felt for a long time going forward. We're seeing that the dollar index on the daily chart is having a positive day, up 0.6% today, but more importantly, look at that candle. It's bouncing from this critical 200 exponential moving average level, and we need to see this fall. Remember, this is inversely correlated to crypto. We were happy when we got the break to the downside. Yes, we're in a downtrend. This is good. But what I do not want to see is I do not want to see this reversal pattern forming. Remember, it's trying to form a W pattern. If I switch this over to the line chart, you'll see it a lot clearer. It's trying to form this type of a reversal pattern to get itself out of trouble. So we need to see dollar index get rejected. Now, do not be surprised to see dollar index come back up to the EMA ribbon, 108 all the way up to here, even 109 here on the dollar index. Do not be surprised to see this happens. And hopefully then risk on can turn back on. We reject dollar index and we continue to send it to the downside. But remember, even in this relief rally for dollar index, even in the movement like this, could be painful for Bitcoin. It could spell a couple of negative weeks ahead. And that's just from a technical perspective. That's just from a wider market saying, you know what, we're still risk off at the moment. And that is why you're seeing the dollar index move to this extent. You're also seeing the US 10-year yield, which is again a reflection of the fears in the market, the risk off nature of the market, up almost 2% today. A strong day here when previously it was looking to lose its EMA ribbon. And now we're back at that 372 level on the yield on the 10-year government bond. This is considered the risk-free rate. Remember, people flock to this when they're fearful, when they don't want to be in risk on stocks. They flock across to government bonds because they feel safer in government bonds, okay? Now, incidentally, we're seeing the US markets. It's trading a short day today. They have a half day for Thanksgiving, and hope you guys have a great celebration if you are celebrating. And QQQ, the NASDAQ, is down 0.5%. This is yo-yoing. It was up 1% a second ago, and then it's falling back down again. We'll have to keep an eye on this to see how does this perform today here on the NASDAQ. Similarly for the S&P, a relatively flat day. A lot of low volume today, which gives you more volatility, okay? So low volume gives you some bit more crazier wicks. So do not be surprised to see a bit of a volatile day. If you're trading that, that's good for you, but it's going to be lower volume, so be very, very careful. The markets could reverse in a couple of hours. You've got to be careful out there. A few other points to touch upon. We've got Binance making the most of the PR right now, adding another $1 billion to its crypto recovery fund. So the basis of this working is he's going to put this crypto fund together to help others who are struggling, because he expects many others are struggling out there, and he expects many others to continue to be trading insolvent, and they're going to want to shout for help. So he's put $2 billion now in a fund. He's shared the wallet addresses. He showed it's transparent, and he says if anybody's in difficult, they can apply to get access to this. He said after a certain period, if nobody uses it, they can then unwind that emergency fund, but he's leaving it at $2 billion for now. So he's making the most of the situation. Again, I've shared my thoughts on CZ and what he's doing. I think he's playing this out well, but again, the lessons we've learned go beyond centralized players. So this argument of who's the best centralized player, it doesn't matter. If you've learned anything right now, it's that you don't want to be on exchanges apart from what you need on exchanges. So I don't agree with the advice of, oh, stay off exchanges. That's not practical. right? You need to trade. You want to buy the dip. Lots of people love using centralized exchanges because it gives them peace of mind. It gives them transparency. They feel like they can reach out to somebody. I get that. We're moving from a traditional finance to a crypto space. It's not easy. Not everybody who's used to FDIC insurance, who's used to the bank giving them some sort of comfort around their money, even though we know there's more nefarious things going on, but you know, on a surface level, they feel like they've got comfort in a traditional bank. They're not suddenly going to go and use a MetaMask and take control of their own keys, and they're scared they're going to lose their seed phrase, right? Various of these things come into play. So let's not jump the gun here and look down upon those who are trying to get into crypto through using a centralized exchange. I personally started with a centralized exchange as well, right? So a lot of people do that, and it's a very normal course of action. It's a very normal gateway to get people into crypto. But what we can learn is diversify, right? Diversify from your stable coins, diversify from the different exchanges. You shouldn't have everything in one certain stable coin. You should have everything in one certain exchange. Have some mixed up across different ones. So, you know, not a big fan of putting anyone on a pedestal, including CZ. And we're seeing that, right? We're seeing that Bitcoin's net position on all exchanges continues to tumble, right? We're seeing loads of money here. If you look at this big red candlestick here, the latest ones we can see here, big monthly declines in exchanges, balances on exchanges. So 172,000 Bitcoins a month, roughly. That's the rate we're seeing it leave exchanges right now. So Bitcoin is definitely flooding off exchanges. People are taking it away. They're not trusting everything that's going on. If you also look at the exchange dominance, you're seeing a huge number of exchange transactions going on. So you're getting a lot of withdrawals, around 77,000 withdrawals, roughly 48,000 deposits. So a lot of transactions, right? So of all the transactions going on per day, which is roughly 264,000, 47% of those are exchange related. Now, what significance does this have? Well, this normally happens during bull runs or peak fear levels. So we know that we are not in a normal state of environment right now. Okay, you've seen this kind of dominance where the exchange dominance climbs normally signifies the top of a bull run, or it signified low levels. Okay, so that's one confidence point, a marker, a data piece that further backs up this idea that we're at a certain level of peak fear, we're at a certain level of capitulation, and we're definitely closer to a bottom than we are a top. If we flick on, we can also take a look at the realized profit and losses. So we've seen another major spike. If you look at that spike here, this is one of the biggest in this cycle of 2020 to 2022 of realized losses seen, with 1.45 billion in realized losses. This is not insignificant, and people are starting to feel this. I mean, you will feel this. Like we spoke about a couple of days ago, more than 50% of people are now opening up their wallets and seeing losses, right? This is huge, wide-scale losses right now, given how far the Bitcoin price has retraced. This is where things get even more interesting. You want to look at the spent volume age bands. And what you'll see here, and this color from here, is we are seeing aged coins of more than 3 months account for 4% of the spent volume. Okay, historically, this is normally lower than 2%. We're now climbing up to this 4% level, as you can see here, which does not happen often. This is showing us that people who have been holding Bitcoin, who've been holding for more than 3 months, it's not people who've just been in and then suddenly they realize they're in a loss. These are people who've been holding, are starting to spend their Bitcoin. They're starting to say, enough is enough. Maybe I bought in November, maybe I bought in December or January or February or March, and now I'm feeling it. I'm feeling it. I've had enough. I'm capitulating. I want to spend my Bitcoin. Similarly, for 6 months, those who've been holding 6 months or longer, you can see here the volume of that is 50,000 Bitcoins a day. And look at the other key levels. July 2021, we know Bitcoin ran down to 29,000 in that period. Look at January 2021 during the bull run. You had a lot of spending going on there, people taking profits, of course. If you look further on, you then have your July 2020 period here. 19, that's 2019. And then you've got your December 2018 period here. So this is a significant level and a significant spike here of people who have been holding Bitcoin for more than 6 months, who bought in Q1, right, of this year, who are now starting to spend their Bitcoin. So people are feeling it. In other words, what is the conclusion? The conclusion is that we're in a really difficult period right now where there is capitulation in the markets. People are exceedingly fearful right now. Risk continues to be up, right? There is no massive recovery happening in the equity markets which we could rely on. But even if that was happening, we wouldn't be able to take advantage of it, because crypto right now specifically is facing these key fundamental issues, which are not just risk on, risk off related, but specifically for crypto. The FTX saga has hit it so hard that people are so worried about who's going to be next. What does this mean for the space? What does this mean for regulation? Do I believe in crypto anymore? And you're seeing a lot of people who have just entered the cycle this year, who maybe only started trading crypto in 2021, late 2021 and 2022, saying enough is enough. I do not believe in this. I'm selling my crypto. Even though I held for 6 months, I kept buying the dip, I kept doing all this stuff, but I've had enough. I do not believe in it. This is not for me. I'm getting out. And it's that level which is going to create that final drawdown and get rid of those weak hands before we're ready to form a bottom and start working our way to the upside. And at these moments, you've got to ask yourself the key questions. Where does your conviction lie? Do you have that kind of a conviction that if Bitcoin fell to 15,000, 14,000, 12,000, are you going to capitulate? Are you going to come up on these metrics as somebody who held for 6 months, 8 months, and then given up? I've seen people in the Discord. I've seen people in the community. This community, the crypto community right now is struggling. You can feel it. Nobody's talking about crypto. Your taxi driver, your Uber driver is not talking about crypto right now. Nobody is stopping you in a grocery store to talk about crypto, right? At your Thanksgiving dinners, who was talking about crypto, right? They're not. People will talk about it when it's relevant, when it's back up at the high prices. But when do we need to do our work? Now. When nobody's talking about it, when nobody's watching this video, when nobody is studying my TA course, link is in the description, which is completely free. Those are the bits of effort you need to do now, which will pay off. Or you can do what I did in my first crypto cycle, where I kind of dabbled in crypto when I first started and then didn't do so well, was in a loss for a bit, and then went back to traditional finance and just went, no, crypto is a bit of a, I'll see what happens when it matures, right? And then I miss a cycle. And then I come in at one cycle later. So you will enter crypto on the cycle that you deserve, based on the work that you put in, based on the research, and based on your level of conviction. And one thing is for sure, the people who are believing in crypto and its ability to prove doubters wrong, that pool of people is increasing. It's not the same as it was in the last cycle, and it's not the same as the one in the cycle before. The people who trust crypto is growing heavier, heavier, heavier. Now, of course, once you have a bull market, like when we ran up to 69,000 versus where we're at now, all those tourists, all that froth on top has gone. But the base people, if you take the bear market of now versus the previous bear markets in the cycles, that pool has increased. And less and less people will be shaken out by the turbulence, because more and more people will understand that crypto continues to come back. After every major halving, it comes back and it proves everybody wrong and goes on its next bull. There you have it, guys. Hope you enjoyed this video. Don't forget to smash the like button and subscribe. Check out the links in the description if you're looking for an exchange to buy any crypto with. Don't forget to go watch through my TA course, ijaz.uk/TA. It's completely free. It won't be free forever. Go learn. Take this moment when the markets are boring, when it's Thanksgiving and everybody else is just playing around with their friends. Go and learn EMA ribbons. Go and learn technical analysis, Fibonacci retracements. Learn all this stuff. So when the next bull market comes, you're prepared with the knowledge to take action on it. Hope you guys enjoyed. Check out the links in the description as always, and I'll see you in the next one.